on our Twitter if you guys aren't following to it right now. But he essentially said, not great, not terrible. And I had to retweet it. So Starbucks, pretty much adjusted EPS came in line with what they were expecting. Revenue, slight miss, nothing really to write home about, unlike last quarter. Q3 global comparable same-store sales declined 3% versus the estimate of 2.35%. Not good still. This is bad. China comparable same-store sales down 14% versus the expected 10%. I'm pulling up that chart next. And Q3 U.S. comparable same-store sales declined 2%. I guess that was the positive that the market saw because they had rough U.S. numbers last quarter. This is my official statement of how I was happy about Starbucks' trading. I'm trying to find. Okay, it must be on my. I was switching between accounts today, but essentially, right now Starbucks. I was very worried that they were gonna have a really nice day today. I was almost too worried because I haven't been buying it for the last month in anticipation of today. Probably not the best move. But today I'm happy with it because it's not going up a whole lot. It's not going down a whole lot. I'm still down 14% on my position, so I'm plenty of room to average down still. But I mean, it's, see, I predicted mixed results. I'm the chosen one. So with Starbucks, I'm trying to find it right now. All right, here we go. Yeah, here we go. All right. So adjusted EPS, 93% share, 93 cents a share. They pretty much came in line, beat that by a little bit. Missed the revenue. I said comparable same-store sales down 3% year over year. U.S. comp sales down 2%. They estimated a little above that. So, I mean, still not great. I don't know why the stock isn't trading down based off of the China comp sales. Yeah, so it's really weird with Starbucks right now, man. It's no. Yeah, I mean, it was just it's a really weird time to own the company. Like, it's very weird. It's a very weird time, but I do think that's still looking like long term. It's still a respectable opportunity. I've heard people say that this company could underperform. I think if you get in at the right price, I think you're going to get a solid return. I'm curious to see though if they announced any buybacks. Maybe if Double D's is in here still, if they announced any buybacks during the conference call, I'd be interested to hear that. We're about to listen to it, but yeah, maybe they communicated value better to shareholders, customers this quarter. They were really set up for a solid recovery quarter. I thought only so much you can do in a couple weeks, right? Like that's really what a quarter is at the end of the day. Only so much you could do in a long amount of weeks and a few months. So I mean, still long term, I'm still so bullish on the company. Sum the earnings up very fastly. The market anticipated the stock would do absolutely shit after last quarter, and they did shit, but not as shitty as they thought, and that's why it's up today. So just there you go. All right, Double D's with the fact checking here. I don't think they did. They talked about allocating capital, their dividend, and targeting a payout ratio of 50%. No mention of buybacks to my knowledge. Oh, fuck. Right now the payout ratio actually is not terrible, which is why they've been getting away with hiking it like 7-8% every year. It's looking a little high if you look at it like compared to its cash flows and stuff because they're spending so much on capex. Like if I pull up the Starbucks dividend payout off of free cash flow right now, I guarantee you it's probably like 70 or 80% just because of how much they're building out new stores and stuff. Now, something that I am interested in is when are these new stores that they're building going to become profitable? That's my big kind of question right now because they built 1,600 new stores, I believe, and it's still not looking great for them. So, like, that's kind of my concern question right now. But thanks for that fact check, dividend, dude. And my software, not to be named right now, is not loading. What a coincidence. For those who know, they know. Not loading right now, so I guess we're gonna have to do it the old-fashioned way. Pull up Google. Starbucks payout ratio based on. Yeah, 80%. So I mean that's not a surprise, but I mean, I think I'm really curious to see where this company's at once they kind of stop building out stores and become like one of those just cash producing giants. I'm really curious to see what they're gonna do. But I think we get to the fun part of the show, which is going over the actual earnings